How to profit from huge inflation for beginners. If you're a beginner in managing your finances, the concept of inflation can be daunting. However, whether you like it or not, inflation can work for you if you do the right thing. In this video, we'll learn how to profit from huge inflation as a beginner and build a respectable portfolio to hedge against inflation. What's inflation? First, you need to understand what inflation is. Think of inflation as a two-edged sword. On the one hand, it can signify the downfall of an economy with more money in circulation but little value. On the other hand, it can serve as a lifeline for the people who know how to manipulate money and make it work for them. Famous investor Warren Buffett said, "The arithmetic makes it plain that inflation is a far more devastating tax than anything that has been enacted by our legislators. The inflation tax has a fantastic ability to simply consume capital." A wise investor once said, "Inflation tends to make the rich richer, the poor poorer, and the middle class devastated." In much more comical terms, former baseball player Sam Ewing said, "Inflation is when you pay $15 for a $10 haircut you used to get for $5 when you had hair." In my own simple terms, inflation defines an unprecedented increase in the prices of goods and services due to increases in production costs and other factors. Accompanying this price increase is also the reduced purchasing power of money, where you can no longer buy the same things you once could for the same amount. When people have excess money in circulation, demand for goods and services rises. The most basic concept of economics states that an increase in demand will push the production costs to meet the demand with supply. Increased production, in turn, leads to higher prices, and the vicious cycle continues. Think about how much food you could purchase with a certain amount years ago, and how much food you can purchase with that same amount now. Chances are, it isn't looking good. The world is no stranger to inflation and recessions. In fact, many countries have gone through the thick of it. However, several investors worldwide have warned and predicted that this inflation is looming very closely, and it might be the worst we've seen yet. Effects of inflation. Now that you understand how inflation works, the next question is, how can you make it work in your favor? First, you'll need to know how to identify the warning signs of impending inflation. The people who get ahead of inflation are those who know how to spot it when it's still so far away. The most easily identifiable sign of inflation is the increase in money production. People who don't understand money are quick to urge the government to simply print more money when there's a scarcity. However, this does a lot more harm than good. Taking Venezuela as a case study, the country's government fell into serious turmoil after printing so much money to keep up with the reduced availability of funds. How did this end? Well, there was so much money in circulation that hyperinflation of over 80,000% seized their economy. To put this in perspective, an inflation rate this high would have caused prices to double at least every 2 weeks and leave money far worthless than it was. In 2020, economics began to suffer when the world was caught in the middle of a pandemic. There was so little money and so many demands that governments simply decided to print more money. This money was used to cater to people, families, healthcare, and businesses struggling to survive under the weight of the pandemic. Hundreds of billions of dollars were pushed into providing financial aid for people who desperately needed the help. Although noble, printing money has its consequences. How to profit from inflation. Now, to my solution for you, the key to beating inflation has interest rates above the inflation rates. This means you have to venture into financial capacities that bring you more money than inflation is taking from you. Currently, the inflation rate in America is a whopping 8.5%. To stay ahead, you'll need to have interest rates serving you at 9%, 10%, and higher if possible. How do you do that? By putting your money in the right places. Now, predicting the economy and interest rates is near impossible. The investment market is a fickle thing that practically has a mind of its own. That's why I don't believe in blindly predicting the economy. Instead, there are investment steps and tips that can help you nurture your portfolio even in high volatility areas. Let's dive right into it. Number 1. Get into real estate or REIT. As long as humans exist, we will always need accommodation to live and operate in. Whether it's homes, offices, industrial use, or special use, humans will always need property. Why don't you take charge of your finances by becoming a provider of such facilities? With inflation, the value of your house rises as with everything else. However, the rental income you receive from investment properties is one item that generally stays up with inflation and sometimes even surpasses it. In reality, given the inflationary climate we are now in, rents in a few desirable cities have risen by 30% in the last year. More rental income, also called a spread, is produced between the cost of your mortgage payment and growing rents when you have a fixed-rate mortgage since loan payments remain constant. Investors primarily have two choices when purchasing homes with an income stream. One is direct acquisitions, often single-family houses, which have a steep learning curve and need a lot of effort to maintain the property and provide strong returns. This requires a lot of research and smart buying, or you could lose your money. The second is passively investing via a REIT, a real estate investment trust, where investment professionals invest on your behalf. Number 2, bond investments. You hear many people talk about real estate, but that isn't the only hedge you can fall back on during inflation. Bond investments are an excellent avenue to protect and grow your finances. The great thing about bond investments is that they're less risky than other investment ventures that will typically yield less. This is great for beginner investors and investors who do not like to see too much red splash across their portfolio. This is also an excellent choice for retirees who have spent the better part of their time in the workforce saving and would rather not risk losing their money. Bonds are structured to increase in value as inflation increases. They can diversify your portfolio and keep it balanced, but typically cost more and yield less than other riskier investments. When choosing, you'll have to ask yourself, can I stomach the risk for a higher yield, or am I fine with playing it relatively safe for a lower yield? Number 3, stocks. Historically speaking, owning strong, solid stocks will afford you some of the best protection against inflation. According to Greg Giardino, a J.M. Franklin & Company CFP, with a properly curated portfolio, you have access to the protection that companies and stocks offer as they are best positioned to adjust to the effects of inflation. The best stocks to purchase are those that generate cash rather than consume it. Buying stocks from companies that have enough market authority to increase their prices during inflation without losing market share should be your main target. These companies can simply pass along the burden of increased production costs to consumers who will continue to buy regardless. Such companies are best suited to accommodate large dollar volume increases, and their stocks will do your portfolio a lot of good. Two most recommended companies among investors that fit this bill are Coca-Cola and Apple. As a stock investor, you have two choices. You could either personally vet and purchase your stocks of choice, or you could look to curated portfolios like the Berkshire Hathaway portfolio, best known for its strict and highly successful stock investment history. This portfolio is owned by none other than the Oracle of Omaha, Warren Buffett, one of the best investors of our time. This portfolio is selectively curated with only the most investigated and researched companies in the world. Number 4, gold. Gold is another asset that will always do well during inflation. For several decades, investors have taken to gold for refuge during inflationary periods when they don't want to hold cash whose value is dropping. Gold is a stable value holding asset that is limited in supply with a value that cannot be watered down, so it is an excellent asset. As investors forfeit their cash to buy gold at a lower price, the price of gold skyrockets, effectively securing their wealth. If you take a quick look at the price trends for gold in the last century or so, you will note that some of the highest price points of gold were in the middle of inflationary periods, specifically in the 1970s to 1980 and more recently 2020. Many investors know that gold is a powerful asset to own when you're trying to hedge against inflation. Cryptocurrency, Bitcoin. Just as I explained, gold is a great asset for storing money, and cryptocurrency, particularly Bitcoin, kind of works in the same way. Although Bitcoin doesn't have the years of research and studies behind it like gold, it has proven to be an excellent investment asset. With cash, inflation drops the value of money. With cryptocurrency, you cannot water down the value of Bitcoin as there's a limited amount of it to be owned, 21 million to be precise. This makes it an excellent form of currency to maintain and even increase the value of your money over time. With a lack of extensive history compared to other assets, I can't guarantee that it will hold up in the long run. I, however, really think that Bitcoin is doing great right now and is on the right track to be a long-lasting inflation hedge. I leave you with two of my most treasured investment tips. First, ensure that you do extensive research before investing in any investment venture. You want to weigh your financial standing and pros and cons to determine what you can trade, what you stand to gain, and what you can afford to lose if things go sideways. Second, never ever overreact and panic trade. The wealth market is volatile, and only the strong will triumph. Even when things seem shaky, do proper research and don't prematurely make hasty decisions out of fear. Some predictions say that inflation will start to drop as production costs reduce and the labor markets normalize. The truth is, we don't know how low it will drop and how long it will take to drop to a favorable position. That's why it's in your best interest to stay protected with your portfolio. Whether or not inflation does reduce, you'll still earn your money and build your wealth. And there you have it, your beginner's guide on how to profit from huge inflation. Don't forget to like, comment, and subscribe to this channel and learn more about investing and building your wealth. Make sure to share with friends or anyone else who might benefit from this video as well. Thank you for watching.